The background of 7-Eleven. Companies the store called 7-Eleven trace their origin to 1927, when several icehouse companies, which primarily sold block ice for food preservation to household without electric refrigerator, merged to form the Southland Ice Company in Dallas. Either after the merge or shortly before it, one of the ice house also began selling food items. The chains were named Toad Stores between 1928 and 1946. In 1946, the chain's name was changed to 7-Eleven to reflect the company's news. Extend hours 7 a.m. to 11 p.m., 7 days per week. In 1991, an affiliate of Ito Yokado, a Japanese retail group, accrued a majority stake in the company and reorganized it as a subsidiary of 7&I Holding. In 2005, 7&I Holding accrued complete control of 7-Eleven and made it wholly owned subsidiary. Since then, 7-Eleven has expanded its global presence and diversified its product and service to meet the changed needs and preference of customers. Next, this is the type of product that 7-Eleven produce. Next, this is the type of product that 7-Eleven produce. Next, this is the type of product that 7-Eleven produce. The location of 7-Eleven companies. Corporate Office of 7-Eleven, Level 3A, Podium Block, Plaza Berjaya, Number 12, Jalan Imbi, Postcode 55100, Kuala Lumpur, Malaysia. This is the operation time of 7-Eleven. And this is the organizational of 7-Eleven. As you can see, this is the statement of cash flow in 2021. Cash flow from operating activities. Cash flow from operating activity, CFO, indicate the amount of money a company brings in from its ongoing regular business activity such as manufacturing and selling goods or providing a service to customer. It is the first section depicted on a company's cash flow statement. Cash flow from operating activities does not include long-term capital expenditure or investment revenue and expenses. CFO focus only on the core business and is also known as operating cash flow, OCF, or net cash from operating activities. Cash flow from investing activities. Cash flow from investing activities, CFI, is one of the sections on the cash flow statement that reports how much cash has been generated or spent from various investment-related activities in a specific period. Investing activities includes purchase of physical asset, investment in securities, or the sale of securities or asset. Negative cash flow is often indicative of a company's poor performance. However, negative cash flow from investing activity might be due to significant amount of cash being invested in the long-term health of the company, such as research and development. Cash flow from financing activities. Cash flow from financing activities, CFF, is a section of company's cash flow statement, which show the net flow of cash that are used to fund the company. Financing activity include transactions involving debt, equity, and dividends. Cash flow from financing activities provide investor with insight into a company's financial strength and how well company capital structure is managed.
A very good day point. My name is Pavinisha Vigneswaran, number metric 10 DA321 F1019. Today I am going to explain about the types of cash and cash equivalents. Type of cash: foreign currency. Foreign currency is the company holding more than one currency can experience currency exchange risk. Currency from foreign countries must be translated to the reporting currency for financial reporting purposes. The conversion should provide results comparable to those that would have occurred if the business had completed operations using only one currency. Translation losses from the devaluation of foreign currency are not reported with the cash and cash equivalents. These losses are reported in the financial reporting account called accumulated other comprehensive income. Types of cash equivalents are marketable securities, treasury bills, and bankers' acceptance, and others. First of all, marketable securities. This broad term covers any investment security that can quickly be converted to cash in a short amount of time. Many of the examples below can also be referred to as marketable security, and companies often lump these investments together on the balance sheet. Treasury bills. These debt instruments are issued by the United States government and often have a maturity date of 1 year or less. Other short-term government bonds. These debt instruments may be issued by any government entity. The creditworthiness of the government agency must be considered when evaluating the risk of the bond. Next is banker's acceptance. This is an agreement where the bank has agreed to guarantee a future agreement between two parties. This instrument is a specified amount to be paid to the other holder on a specific date. Commercial paper. These are short-term bonds or debt issued by corporations. Commercial paper has a maturity of up to 9 months, which is 270 days. The interest rate on commercial paper will vary based on the creditworthiness of the issuing corporation. Money market account. This interest-bearing account is similar to a saving account. However, they often require larger minimum deposits and have some minor restrictions to the account. Certificates of deposit. CDs may be considered cash equivalent depending on the maturity date. Preferred shares of equity. This may be considered a cash equivalent if they are purchased shortly before the redemption date and not expected to experience material fluctuation in value. Question D. Provide two comments regarding the company's performance based on the cash flow statement. In preparing the annual financial statement of the group and of the company, the directors are collectively responsible to ensure that these financial statements have been prepared to give a true and fair view of the state of affairs of the group and the company as at the end of the financial year, and the results and cash flows of the group and the company in accordance with applicable approved accounting standards in Malaysia, the provisions of the Companies Act 2016, and the main market listing requirements of Bursa Malaysia Securities Berhad. Since the end of the previous financial year, no director has received or become entitled to receive a benefit other than benefits included in the aggregate amount of the emoluments received or due and receivable by the directors, or the fixed salary of a full-time employee of the company or its related corporations as shown in the note 6 to the financial statements by reason of a contract made by the company or a related corporation with the director or with the firm of which he is a member, or with the company in which he has substantial financial interest, except as disclosed note 31. to the financial statements. During the financial year, the total amount of indemnity coverage and insurance premium paid for the directors and officers of the group and of the company are 30 million thousand and 43,073 ringgit respectively.